Okay, let's unpack this. Welcome to the deep dive. Today we're going beyond the headlines, really getting into a fascinating story. It's at the intersection of some big names, cutting-edge fintech, and, well, super complex world of U.S. financial regulation. Honestly, this one's been a real head-turner. I think a lot of us watching the prediction market space kind of did a double take. So our mission here in this deep dive is pretty clear. We're going to sift through these recent announcements. You've got Donald Trump Jr.'s new role. You've got Polymarket's big strategy pushback into the U.S., and there's significant money involved, too. We really want to figure out what this all means for the future of prediction markets. And crucially, what does it mean for you? Whether you're just watching, maybe thinking of participating, or just curious about how we get information these days. This isn't just one news story. It feels like pieces of a puzzle coming together, maybe showing a real shift.
I agree. It's striking how these different elements, high-profile names, serious regulation, crypto tech, are converging right now. It definitely feels like a new chapter beginning for these markets. And yeah, it warrants a closer look.
Okay, so let's jump right in. The headline grabber. Donald Trump Jr. is officially on Polymarket's advisory board. Now, if you follow politics or tech, you know this isn't just like any board appointment. It immediately brings a very specific kind of visibility. And let's be frank, a definite political angle to a platform aiming for neutrality.
Absolutely. And just to clarify for everyone, Polymarket, it's one of the bigger names in these decentralized prediction markets. So instead of polls asking what you intend to do, people trade shares on outcomes elections, yes, but also sports, science, whatever. The price of those shares acts like a real-time probability score driven by people putting their money where their mouth is, essentially. Yep. So bringing someone like Donald Trump Jr. with his huge public profile and political standing onto an advisory board, that's a strategic move. It's layered. An advisory board gives guidance, insights, sometimes just public endorsement. And for Polymarket, navigating tricky regulations, choosing such a high-profile, maybe polarizing figure, you could see it as trying to broaden their appeal, maybe, or just generating massive media attention in a way a typical finance hire never would.
Exactly. And that's where it gets really interesting, doesn't it? You have to ask about the Depper strategy. Is it just about brand recognition, reaching new users, or is it about lending a different kind of legitimacy, maybe? Especially as they're pushing for regulatory acceptance. There's a tension there, isn't there? A platform wanting objective probabilities tied to someone so deep in partisan politics. How do they walk that line? And what does it say about how far they'll go for market share?
It's definitely a calculated risk, no doubt about it. And the timing, like you said, it's not random. It lines up perfectly with Polymarket's bigger goal right now, getting back into the U.S. market. And this is key, doing it in a fully regulated way. This isn't just trying again after past issues. It's a structured, legally compliant push. They want to be a legitimate player in the U.S. financial system long-term, not just some crypto experiment on the side.
So they're not trying to skirt the rules anymore. They're actively trying to get inside the regulated tent. That's a huge step for any fintech, especially in prediction markets, which regulators haven't always known what to do with. What are the actual steps they're taking? What does this regulated re-entry look like?
Okay, two really big things signal their commitment here. First, and this is probably the most critical piece, they've acquired an exchange that is licensed by the CFTC.
CFTC, Commodity Futures Trading Commission.
Exactly. That's the main U.S. regulator for futures and options markets. Now, why does that matter? Think about it. When you buy a share on Polymarket predicting, say, an election outcome, it's not just a bet. It's a financial contract whose value depends on a future event. That makes it look a lot like a futures contract. And that puts it squarely under the CFTC's jurisdiction, distinguishing it legally from, say, simple gambling.
Ah, okay. So getting that CFTC license through this acquisition is like their official entry ticket.
It's basically your golden ticket, yeah. To operate legally with full oversight in the U.S., it's them saying, okay, we'll play within the established framework, the very framework that caused issues before. And the second thing, they've actively resolved those earlier legal problems.
Right, cleaning the slate.
Exactly. It's not just paperwork. It's a public statement that they're committed to compliance. It tells regulators, users, and importantly, investors, we're serious. We have a clear path forward. It shows a certain maturity, not just for them, but maybe for the whole sector.
That's a really strong point. And it brings us back to why this regulated capacity matters to you, the listener. This isn't just boring regulatory stuff. It changes the experience. A regulated market suggests these platforms could become much more stable, more transparent, maybe more trustworthy. It means clear rules, oversight, accountability, things that weren't always there in the early days. And bigger picture, It says something about how U.S. regulators are dealing with new financial tech, right?
Hmm.
Maybe moving from just saying no to figuring out how to integrate these things, sort of like structured inclusion, acknowledging the potential upside while managing the risks. It's fascinating.
It really is. This shift from the sort of Wild West fringe to something more established, it means the benefits people talk about, like rapid information aggregation, real-time insights, could actually be used more widely, with more confidence. It's a sign the sector is growing up, trying to fit into the recognized financial world.
Okay, but pulling off a move like this, you've got the big name advisor, the complex regulatory dance, the whole reentry plan that needs fuel. It needs money. Which brings us to the investment side of things. Specifically, this strategic investment from 1789 Capital.
That's right. And it's not small potatoes. The estimates are in the double-digit millions.
Wow.
Yeah, that's serious institutional money. It shows pretty strong investor confidence, not just in Polymarket's plan, but maybe in the whole idea of regulated prediction markets. They believe the market's ready for this more formal approach. But it's bigger than just Polymarket, I think. It reflects this growing interest, this reevaluation by serious investors. Why are they putting significant capital here now? Well, these markets are getting recognized for being remarkably good at pulling together diverse information quickly. They cut through the noise, maybe some biases, and give you these probabilities about the future.
The wisdom of the crowd thing.
Exactly, but harnessed efficiently, in real time. Sometimes faster or differently than traditional polls or expert forecasts, especially when things are moving fast. Investors see that potential. Using these markets to inform big decisions, politics, business strategy, science, you name it. The promise isn't just betting, it's generating actual usable foresight.
So you put it all together, substantial investment, a headline-grabbing advisor, and this very deliberate move towards regulation. It really does feel like a turning point, doesn't it? Are we watching prediction markets move out of the niche sort of controversial zone and become more mainstream? Maybe even a critical tool for intelligence gathering. It feels like a shift.
It certainly feels significant.
So just to wrap this up for everyone listening, we've seen this convergence. Donald Trump Jr.'s role at Polymarket brings visibility, political dimensions, raises questions. At the same time, Polymarket is making a very calculated regulatory play. Resolving past issues, yes, but crucially, acquiring that CFTC licensed exchange. That signals a deep commitment to playing within the U.S. financial system. And underpinning it all, serious money. Those double-digit millions from 1789 Capital show that investors are buying into this vision, seeing value in a more mature prediction market sector. These aren't just separate news items. They weave together to show a landscape that's evolving fast, getting more complex, and definitely aiming for broader acceptance.
And this convergence, it leaves us with a really important question to think about, doesn't it? As these markets move from the, let's say, digital edge into the regulated mainstream, how does that change their core function? Will more regulation and traditional finance involvement actually make their probability estimates better, more reliable? Or could it maybe dilute the raw wisdom of the crowd somehow? Perhaps by changing who participates or by adding constraints that weren't there before. And maybe stepping back even further, are we going to see other emerging tech sectors try this same playbook? Combining high-profile figures, serious regulatory efforts, and big capital injections as they try to break into the mainstream.
Those are definitely the questions to mull over. It points to a future where these platforms could be much more integrated into how we understand the world. It's clearly a dynamic space. How these forces, personality, regulation, money, technology interact is going to shape what comes next. We really encourage you to keep watching, keep thinking about what it all implies for how we get information, assess risk, and make decisions. Thanks for joining us on this deep dive. We'll catch you next time.